Mohamed El-Erian, Chief Economic Advisor at Allianz. It's wonderful to have you here with us at Economy Middle East.
Thank you for having me.
Now, earlier in your session, you mentioned the dominance of the dollar and what might happen in the future. Now, what key signs point to real structural decline, and what would that mean for dollar pegged economies if the dominance was no longer there?
So, the good news for the dollar is that there is no other currency that can step in and replace the dollar at the center of the global economy. The less good news for the dollar is that at the margin, people are finding ways to diversify away from the dollar. We see this in the amount of gold that is being added to reserves of central banks. Gold now is the second most important asset in reserves, and it will soon be larger than than the dollar if the trends continue. We're seeing this in how foreign investors invest in the US equity market. They're willing to take the exposure of US companies, but they're trying to hedge their dollar exposure. Why is that happening? For three reasons. One has to do with US economic conditions. The fiscal deficit is high, which means a lot of bonds will be issued in dollars. The debt is high, which means a lot of bonds have to be refinanced at higher interest rates. The second reason why this is happening has to do with signals that came out of the US concerning possible changes in the way they manage that debt. And the third reason that's happening is geopolitical. It's being driven by countries' desire to diversify for geopolitical reasons. So this is something that is going to continue. And the important thing for the US is to be able to handle the challenge of its own economy. As to what does it mean for countries that are pegged to the dollar, there is no other better currency to peg to right now. So it doesn't mean very much in terms of should they change their exchange system, because the dollar is still the dominant currency. It's just an understanding that the role of the dollar in the global economy is slowly, and I want to stress very slowly, becoming somewhat less important.
And you mentioned gold, and gold has been surging for the past couple of years and had a great rally, if I may say so, in the last year. What kind of role should it play in a diversified portfolio, would you say?
So people are now recognizing that if you look at safe havens, there aren't all that many that you can rely on. They're also realizing that gold is benefiting from greater adoption. We see more central banks buy gold for their reserves. We see more institutional investors increase their allocation to gold in their model portfolios. So, both for safe haven reasons, but also in terms of upside because of greater demand for the asset, there's a lot of interest. And that explains why gold has gone up when the dollar has been strong, gold has gone up when the dollar has been weak. Gold has gone up when stocks have been going up and when stocks have been going down. Gold has gone up when there's geopolitical tensions and when there's these tensions go down. That's what has been consistent. The mistake that people make is they assume that an upward trend will not have volatility. But by definition, when something goes up 60%, it attracts a lot of speculators. And that means that at some point, the inclination to realize your profits becomes very high. So gold will continue having an upward movement, but it will be a volatile upward movement given how much prices have gone up already.
And you often emphasize importance of resilience and optionality in portfolios. Now, what would be some practical steps for investors that can build a resilient portfolio amid global uncertainty?
So the first thing is a mindset, is understanding that we're living in a world now that is being rewired. And as the world gets rewired, it is subject to more surprises. So it's really important to make sure that the manner you invest is a manner that allows you to maintain it through volatility. Because the biggest investment mistake is when people sell when prices go down on a temporary basis. So it's very important for a mindset to be ready for volatility. Second is to limit potential defaults. Time forgives most investment mistakes. It doesn't forgive default. And then the third element is to be open minded. Had I sat with you 3 years ago and told you that gold belongs in a model portfolio, you would have said, but very few institutional investors have it. But look at today, a complete change. So it's very important to be open minded, to realize that the world is changing, and to try to understand how it's changing.
And finally, I'm going to read some numbers from the IMF. They reported economic resilience in MENAP region with GDP growth set to reach 3.2% this year and up to 3.7% in 2026. How sustainable do you believe this growth is, considering, again, the global instability?
So but more importantly, many investors, including foreign investors, believe it is sustainable because they believe that parts of the Middle East, North Africa, offer the perfect conditions that you need to navigate this world. So, what are these? You mentioned two of them. One is resilience. There's a lot of financial wealth in this world, which allows you to be able to absorb changes compared to, for example, the advanced world that has a lot of budget problems. So, financial and human resilience is very important, and part of the Middle East has it. The second part is agility. There are now leaderships in many countries that understand that they can position themselves for the world of tomorrow. And we've seen tremendous investment in AI. We've seen tremendous investment in supply chains. And that gives the region the agility to navigate what is a more uncertain world and a world subject to more shocks than in the past. And then the final element you need in agility and resilience is optionality. And again, this is part of the world that, because of its political importance, doesn't need to choose between China and the US. It can interact with both. Saudi Arabia, UAE, they have characteristics that allow them to interact with. So there is that interest. The mistake people tend to make, though, is to think that what's true for a group of countries is true for the region as a whole. And unfortunately, parts of the regions as a whole do not have the conditions to benefit from the growth that the most successful countries will benefit from.
Thank you for joining us and thank you for your insights.
Thanks for having me.